categories who are holding the physical shares to be mandatorily dematerialized at the time of IPO. The third proposal is regarding simplification and streamlining of placement document for qualified institutions placement. So as you know, the QIPs are undertaken by listed companies and they are offered to qualified institutions buyers. These institutions are well aware of the developments. They are institutional players and listed organizations, there is a lot of disclosures already available. So therefore, this placement document was earlier too long, and that has that's supposed to be rationalized. And this is building on the simplification and streamlining earlier undertaken for rights issue by listed entities. So what we are basically, the risk factors, now we are saying that they can be included only specified in relation to the issue. Not all of the risk factors need to be given. Providing summary of financial position, providing a summary of issuer's business instead of giving detailed this thing. I think there are several such things where we have rationalized, as a result of which is expected that the placement document may be reduced approximately by 40 to 50%. And it will also bring in uniformity in disclosures by all the issuers. Here I just want to point out as a generic case, all of these proposals, there have been consultation papers, public consultations have been done. It has gone to the respective committee and then it has come to the board. So I'm not repeating it for every item, but the same process has been followed, and you are aware that we have now a regulation which says how to bring in changes in the regulation, which mandates public consultations. So all of these cases, public consultations have been held. And that is how I think media already knows most of the time, but this time you will also see in your press releases a little bit of a different version maybe, and maybe you can really very quickly grasp what is being changed, because all of these are very technical matters. So of course, if you need further details, you may of course refer to consultation papers which give you more information. The fourth proposal relates to the special measures to facilitate voluntary delisting of certain public sector undertakings. Now, there are some public sector undertakings where the holding is 90% or above that of promoter. Now, they are there due to many legacy reasons, historical reasons. Also due to a fact that some of them may not be doing well, but they may have been listed in the past on a very thin, sort of float. And these may be required to be delisted in one sense, and we have now we are allowing special measures for such PSUs, but these PSUs expressly do not include banks, non-bank financial companies, and insurance companies. So there have been some media reports on whether it will impact public sector banks or whether it will impact LIC or other insurance companies. So this is not applicable for such categories, which is expressly mentioned. It's only mentioned for the other PSUs, which are 90% and above, and basically what is being provided is easier method where the delisting would be possible through a fixed price delisting process, which will be at least 15% premium over the floor price, and the floor price will be determined through the valuers and all that is explained. And Also, the requirement of threshold of approval by public shareholders in favor of delisting set at 2/3 majority is also dispensed with, because number of minority shareholders is very, very low. Now, these eligible PSUs, which are when delisted, now they may continue as a unlisted entity, or they may be struck off, or it may be decided to be wound up. In that case, if there is those delisted PSUs undertake voluntary strike off, effected after the date of listing, but not later than 30 days from the expiry of 1 year period subsequent to delisting. So subsequent to delisting, 1 year plus 30 days, within which any remaining people who have not been able to claim their, get their shares encashed, they would be able to come and take it. And thereafter, this will go to the designated stock exchange, and this will be available for 7 years. And post which, if the remaining amount, if any, shall be transferred to Investor Education and Protection Fund for entities established under Companies Act, or to SEBI's Investor Protection Investment Fund. For any claims to be made subsequent to such transfer, the investor can approach the designated stock exchange, which will be reimbursed by IEPF or IPF as applicable. So again, these proposals have also gone through a public consultation process. Just for your information, there are only 5 such listed PSUs where promoter shareholding equals or exceeds 90%. The next proposal relates to rationalization of regulatory framework for social stock exchange for ease of doing business. Now, in order to facilitate social enterprises, including for-profit organization and non-for-profit organization, accessing the social stock exchange mechanism, so a number of amendments have been approved. Key amendments are inclusion of legal structures such as trust registered under Indian Registration Act 1908, charitable society registered under the Society Registration Act of the relevant state, and companies registered under Section 25 of the erstwhile Companies Act. These have been brought in within the definition of NPOs in the scheme. Then there is a new term, social impact assessment organization, which will replace the term social impact assessment firm. This will be signaling a profession agnostic approach for such organization and requiring such organization to be empaneled with specified SROs, self-regulatory organizations. Such organization will be required to have at least 2 social impact assessors in full-time employment for conducting social impact assessment. Then this also includes requiring social enterprises to raise funds through social stock exchange mechanism within a period of 2 years from its registration on such exchange, failing which its registration will lapse. Expansion of eligible activities for social enterprises to mobilize funds by aligning activities with activities listed in Schedule Roman 7 of the Companies Act, which governs the CSR activities of companies. So that has been made aligned to that. Then SEBI can specify more target segments for inclusion under the eligibility criteria, easing eligibility criteria for NPOs, bifurcation of the annual disclosure requirements into financial and non-financial matters, and NPOs being permitted to self-report the annual impact report of the projects, even when funds have not been raised through social stock exchange. So all of these measures will help give a further fillip to the social stock exchange system It's a very unique and novel system. So far, 20 NPOs have non-profit organization have raised about 20 crore, but there is a greater, there's a much greater potential. And with an expanded and rationalized framework, it is expected that more enterprises, more people will be able to raise funds to this mechanism. The next item relates to the rationalization of merchant bankers' regulations for ease of doing business. As you're aware, in December 2024 board meeting, a slew of proposals were approved in terms of bringing in contextualize, because this these regulations are 1992 vintage, and they were updated, and a number of things were brought in. One of the issues where we needed to review was regarding to the decision to hive off into a separate legal entity, which has been reviewed, and now it has been decided that the legal hiving off is not necessary. Merchant bankers may undertake activities which are within the purview of any other, so they will obviously take up the regulated activities by SEBI. They may also undertake activities which are within the purview of any other financial sector regulator, provided it shall comply with the regulatory framework, if any, as may be specified by the respective financial sector regulator. Third, they can also undertake activities which are not within the purview of SEBI or any other FSR, provided they are fee-based, non-fund-based activities and pertain to financial services sector. And these activities shall be subject to the conditions that shall be specified by SEBI. Basically, allowing them to take up those activities, but with proper segregation of that into a business unit, and also informing the clients very clearly that these are unregulated activities. So there's a proper disclosure, and also subject to handling the conflict of interest properly. So therefore, rest of the proposals are as it is, as per December 24 approvals. And this proposal of hiving off is now changed, and there is no hiving off of legal entity is necessary. The similar thing is regarding the debenture trustees. A number of measures were taken for ease of doing business in December 2024. However, one of the points was again hiving off of an activities, hiving off the activities which are unregulated to another legal entity, which has now been reviewed, and it has been decided that that will also not be necessary with similar conditions. The conditions are the same as the merchant bankers. And rest of the proposals of December 2024 will be as it is. The next proposal relates to the ease of doing business for the activities of real estate investment trusts and investment infrastructure trusts, which are InvITs. Now, there is the first point in that is the clarification which is needed in terms of definition. So the clarification on definition of public for minimum public unit holding requirement has been done. There has been some confusion around it. The second issue has been that ease of doing business is the adjustment of negative cash flows at holdco with distributions received from SPV in calculation of the net distributable cash flows. So it's like there is a sometimes in a structure there is a holdco, there is a holding company, and there is an SPV below that. Now our regulation says SPV, whatever cash flows come in, 100% will be distributed, and holding company, whatever is there, 90% will be distributed. Now there may be a problem that holding company may have some negative cash return for a while, because they can also hold the assets and they can also take the debt. In which case, there will be, this is a gray area in which, then they will not be able to set it off. So whatever the cash flows are coming from SPV and whatever is that, so net distributed will be then distributed. So there will be a possibility of adjustment of those negative cash flows, and this will be done as per the proper disclosure. So next is set of thing is alignment of timelines for submission of quarterly reports under InvIT regulations within the timelines for submission of quarterly financial results. Similarly, alignment of timelines for submission of quarterly reports to trustee, and so on and so forth. So all these, and including valuation report. So all of these have been now brought in line with the submission of financial results, so that there is no extra burden, compliance burden. So another one is that alignment of minimum allotment with trading lot for privately placed InvITs. So this trading lot, as you know, is for secondary market lot is 25 lakh for InvIT, and for primary market lot it was 1 crore or rupees 25 crore depending upon the asset mix of the InvIT. So they have been aligned. The next set of proposals is SEBI certification of associate persons in the securities market. And you know that there are, for various intermediaries, there is a requirement to give to their employees, etc., which we call associated persons, certificates. They have to obtain certificates from NISM and other things. And this is today, it has to be gazetted. You have to make an official gazette. So that is a cumbersome process. We have said that this can be notified with an order instead of a gazette. That means who qualified to get the certificate and what are the timelines, etc. Then we have another important thing regarding custodians. As you know, the custodian regulations of 1996 have been updated after a long time. After 96 have been updated. This board, this was cleared by the board in December 2024. But there was an issue regarding, again, hiving of that unregulated activities into a separate legal entity, which has now been dispensed with. And custodians shall not be required to set up a separate legal entity subject to certain conditions, and that will be notified. The next set of proposals is regarding co-investment opportunities within the AIF structure for category 1 and 2 AIFs to enhance ease of doing business for AIFs. This has been also an important demand of the industry for a long time, to permit the category 1 and 2 AIFs to offer co-investment scheme. This is, to some extent, this is already possible under the portfolio manager scheme under PMS regulation. However, more flexibility is being given now. In addition to that, whatever is already available under PMS, a co-investment will be possible. and co-investment means investment made by a manager or a sponsor of the AIF or by investor of category 1 and 2 AIFs in unlisted investee companies where such a category 1 or category 2 AIFs makes investment. So, now co-investment schemes introduced by under AIF regulations will have the following key features. This shall mean a scheme of category 1 or 2 category AIFs which facilitates co-investment to accredited investors of a particular scheme of an AIF in unlisted securities of an investee company where the scheme of AIF is making investment or has invested. A separate CIV scheme shall be launched for each co-investment in an investee company subject to safeguards to ensure that the scheme is used only for bona fide purposes. Certain regulatory requirements applicable to other AIF schemes shall be relaxed for CIV schemes. So, this scheme will allow a lot of flexibility and make it available for investors and other additional opportunities without actually without adversely affecting the interest of those who have invested in the main scheme, in main AIF. And those safeguards have also been given. For example, exit has to be uniform, together. It can't be, exit can't be earlier than or later than the main exit. And similarly, offering the co-investment opportunities to everyone. The next proposal is regarding the reviewing the regulatory framework for angel funds under AIF regulations to rationalize their fundraising and enhance ease of doing business. Now, one of the core principles of SEBI is to ensure sustainable capital formation across securities market and facilitate investments into startups. However, we have to also to ensure that these investors with risk capabilities are shown offers to invest in unlisted startup through angel funds. So currently there's no verification other than by fund manager as to whether an investor qualifies as an angel investor or not. In addition, angel investor criteria was defined in 2013 and economic thresholds need to be updated to reflect the changed market indicators since then. So therefore, given the above background, angel investors will now need to be accredited investors, which is in short AI. Note that in AI there is independent verification of investor status with thresholds that update to the current market levels. Now, the board has also approved a proposal to amend ICDR so that AIs will be included as QIBs for the limited purpose of investment into angel funds only. Not for IPOs or other things, only for angel funds. AI adoption has been minimal now. In this context, the accreditation process has already been eased, and we have issued a consultation paper on this issue yesterday to separately look into how we can popularize and ease the AI, that means accredited investor ecosystem where they can actually make it faster. So the basic intent is that once you have the accredited investor ecosystem which is up and running, I mean in larger, today we have not many are accredited, it will be possible for us to consider more lighter touch regulations because these investors would be in any case will be able to bear the risks with full due diligence of their own and therefore would not require the kind of investor protection which you will normally afford to a retail participant. So there are several ease of doing business measures for angel funds also. For example, relaxation of floor and cap for investment in an investee company which was earlier 25 lakh and 10 crore respectively, has been expanded. Now it is 10 lakhs. That means floor is now 10 lakhs and ceiling is now 25 crore. So, and removal of concentration limit of 25% of total investment in an investee company has also been removed. Allowing contributions from more than 200 AI investors in investment will be possible through the QIB definition. Enabling follow-on investments in investee company, which is no longer a startup. That will also be possible. For fairness, angel funds shall offer each investment opportunity to all its investors and allocate investment among consenting investors in the manner as explicitly stated in the PPM. And there is also a skin in the game issue there as well. The next proposal is to relax regulatory compliances for FPIs investing only in government securities, GSECs, to facilitate ease of doing business. Now, certain regulatory requirements for all existing and prospective FPIs that exclusively invest in GSECs, and we will refer to them as GS FPI, will actually face less regulatory requirements. As you know, that several global index providers have announced inclusion in GSECs in their respective bond indices. And FPI investment in FAR eligible securities has seen a significant increase and has crossed 3 lakh crore mark in March 2025. So certain regulatory requirements specified for FPIs under the FPI regulations and circulars issued there are applicable to FPI investment into equity and corporate bonds and not relevant for investment in GSECs. In this context, the below mentioned relaxations are expected to give a fillip to FPI's investment in government securities. And what are these relaxations? The important one are the periodicity of mandatory KYC review for GSPI shall be harmonized with RBI's requirement. GS FPIs will therefore have less frequent mandatory KYC reviews. Existing and prospective FPIs that exclusively invest in GSECs under the fully accessible route shall not be required to furnish investor group details. Such details are largely relevant for monitoring FPI exposures into equity and corporate debt only. Non-resident Indians, overseas citizens of India, and resident Indians individuals shall be permitted to be constituents of GS FPIs without any restriction applicable to other FPIs, including being in control of GS FPI. The conditions regarding participation of RIs, for example, contribution to the liberalized remittance scheme and in global funds whose Indian exposure is less than 50%, shall continue to apply. GS FPI shall be permitted to intimate all material changes within 30 days instead of 7 days otherwise. The board has also approved an amendment to delete Schedule 5 from regulations containing the format of a model disclosure document along with the restructuring of disclosure and issuing the same in a simplified manner through a circular. This is for ease of doing business for portfolio managers by simplifying the format for disclosure document. As you know that portfolio managers also have to give the disclosure document. This disclosure document now is being split into two parts, a more static part and a more dynamic part. The more dynamic part they will be able to change. Static part also doesn't require much change. So therefore, whenever they have to issue, the more dynamic part can be taken and the investors can also focus on those changes. This will be ease of doing business both for portfolio managers as well as for the investors who would be able to understand more clearly rather than looking at the whole big document. So document as such is not getting reduced. It's only the dynamic and static part which is which will actually help focus. Now, board has also noted that a settlement scheme has been, it has been decided to introduce a settlement scheme for certain stockbrokers who traded on the National Spot Exchange Limited (NSEL) platform and applied and were registered as SEBI as trading member, clearing member under SEBI Regulations 1992. This settlement scheme has been approved by the competent authority at SEBI following recommendations made by High Power Advisory Committee under Regulation 26 of SEBI Regulations 2018 and was placed before the board for information. The settlement scheme shall provide an opportunity to such stockbrokers against whom enforcement actions have been taken by SEBI by availing the benefit of the scheme. The stockbrokers may settle such proceedings and seek expeditious conclusion of the said proceedings. As you are aware that this settlement scheme is being brought in following the SAT orders on a number of appeals which went in, and there are many appeals are also pending. So in order to have a uniform approach to this and not to go for further litigation into the matter, this settlement scheme has been arrived at, and the details would be available for you to see in your press release. SEBI board also takes note of the settlement scheme to aid settlement of violations of winding up provisions by migrated venture capital funds. You are aware that there was a decision to introduce a one-time settlement scheme. There was a decision to go for, changing the VSF regulations and bringing them over to AIF regulations, and there was a timeline within which their schemes had to be wound up. And for various reasons, this has not been possible, sometimes due to also the, the investments which are illiquid and due to other reasons. So this is a settlement amount which is a scheme has been arrived, and modalities for making the application for settlement will be informed in due course. Migration to AIF regulations would help the VSFs to secure an additional liquidation period to liquidate the assets and wind up the schemes. However, such migration would not absolve the VSF from their past delays for winding up such schemes. This scheme is intended to provide expeditious settlement of the past non-compliance related to the tenure of scheme only, without any additional burden to investors. Then the next set of thing is again to encourage dematerialization of securities as well as to streamline certain processes in view of current regulatory landscape. So there's amendment to SEBI LODR. The board has approved the following proposals: mandating of issuance of securities by listed entities only in dematerialized form in case of the corporate actions. Whenever any corporate action is taken, like consolidation, split of face value of securities, and scheme of arrangements, this will be, done only through demat securities. So it will be made mandatory. Over a period of time, as you know, SEBI and MCA have taken a series of measures to promote the dematerialization of securities in view of its various benefits. In the last few years, special efforts have been made in collaboration with listed companies having a large number of physical security holders. These efforts have resulted in significant progress through policy, as well as dematerialization has been encouraged on rights issues, on bonus issues. Fresh issues by listed companies can only be made in demat mode. Further transfer of securities can only be in demat mode. So further, in order to encourage this has been creation of physical securities by listed company for corporate action has been prevented through this measure. And the last in the stream of several reforms approved the use of liquid mutual funds and overnight funds for compliance with deposit requirements mandated for investment advisors and research analysts. So this will allow the IAs and RAs to use liquid mutual funds and overnight funds as an additional option to the bank deposit, fixed deposit, for the purpose of compliance with deposit requirements under their respective regulations. Today they are required to maintain a deposit with a scheduled bank. So more options are being given. IAs and RAs have suggested as an alternative FD units of liquid million marked in favor of ASBs, which is administration and supervisory body. So this will help them, as per the industry ask, this has been done. I stop here. Sorry for a little longish, but we had several agendas in this board. Thank you.
Over here in the press release it says that if the have been granted ESOP at least 1 year prior to filing DRHP, the startup founder will still get the benefit of ESOPs. He said it cannot be granted, so what should not be allowed?
Fresh grant is not allowed.
Okay, fresh grant. 1 year is anything which is granted. So in 2025, if I file a DRHP, and if I get an ESOP in 2024, I am allowed to exercise that.
Yes.
Thank you.
And so we want to go one by one. And on the continuous for the same question, you have said that SEBI will assist public companies and certain other requirements relating to share-based benefits will be done. Any other apart from these two which are under consultation or being discussed?
I didn't get your question.
So in the 1.4 paragraph, it is said that relax certain requirements relating to share-based benefits, and before that it is also said assist public companies who are intending to list. Any other measures apart from these three that have been mentioned?
No, these are the measures.
And any limits on the ESOP, like?
Because one important issue was the CCS. Now, if you have a structure, say in Singapore or somewhere, where you have a CCS, how does a CCS get into this? Because if you have a scheme of arrangement, they are, for reverse clipping, they have to go back to the NCL and work out. Now they are changing their incorporation from, say, foreign jurisdiction to Indian jurisdiction. They go to NCL. So whatever the scheme of arrangement, etc., will be arrived at, in that, apart from equity share, there will also be the shares, which will be, convertible. This thing, and that was not explicitly allowed. And unless until that is allowed, that will not happen.
Any other limits at the ESOP, like any cap and how much ESOPs can be these?
No.
So one more question apart from, so the board, one on the board meeting only and one separate. One week we have written that the merchant bankers will be allowed certain fee-based and other activities which are not regulated by other financial services, financial regulators. What are these activities, and if you could help us understand what these advisory or anything else that is?
So just to add to what Khushbu is asking, in case there is issue with respect to those activities, under whose jurisdiction will that come? Because in one of the things in Custodian, I think you are saying without recourse to SEBI. So who will be responsible for that in that sense?
So there are two things here. If a merchant banker is providing service which falls under the jurisdiction of other financial service regulator, then it will fall under their jurisdiction, and whatever grievance redressal mechanism they have, they will try to address it. If it does not fall under any financial service regulator, then if you see press release have clarified that certain more terms and conditions will be specified by the SEBI. So there it will be made clear that how it will be disclosed to the investors and how investor will confirm. That means up front he will have to disclose that these are the activities which do not fall under any regulator. So they are unregulated activities. So therefore, there is no grievance redressal mechanism available.
So what are these activities?
So like consultancy, whatever advice or something which is not regulated by any financial service regulator, but it should be related to the financial service sector.
So is it
So, but
okay to provide
For example, you have unlisted enterprises. They may be advising unlisted enterprise. We are dealing with only listed. So that is unregulated by SEBI.
Won't it be adding a lot of risk to the investors, because now they will not be able to come back to SEBI in case of a violation? And the second thing is that, of course, if the activity is part of any other financial sector regulator, are they required to register with that financial sector regulator before undertaking that activity? Because you are not asking them to hive off that activity into a separate company.
No, they are already, if they are there with the SEBI activities and SEBI regulated activities, if they are being regulated by the financial sector regulator, they will notify that we will be to the clients that we are regulated by so-and-so, by ADA or by RBI. If they have any other which is not even regulated by them or not even regulated by SEBI, they will make very clearly a disclosure that this is not regulated by any regulator. So there we are bringing in a very clear disclosure to the client. He should not be under the impression. So they have to do it in all their communication. Secondly, will be no risk spillover. These are fee-based activity, not fund-based anyway. They will not be able to, so net worth requirement, suppose we are putting, that will be secured. And that will be in the form of a separate business units. And there will be Chinese wall, there will be a conflict of interest clauses. So all these things will be, when we issue the circular, these conditions will also be there.
Because in the past there has been some cases where merchant bankers have been involved in activities which are not under the purview of SEBI but other regulators maybe, and then there is an issue with respect to who will be responsible
But
to take an action.
that is why precisely we are bringing in this very clear definition and clear disclosure so that everyone is aware that whatever thing is being done, who is the regulator. And if it is non-regulated, the client is aware that it is a non-regulated activity. In any case, they will take advice,
Sir, they have
Sir,
to
I
make a
have
disclosure
a-
about that. They are not regulated by SEBI.
Sir, I have a couple of questions. First of all, the format is very helpful, and you took us through every amendment or the change. So I want to move a little away from the things that were a part of the board meeting and the agenda here. The first question is, of course, some time ago we had changes with respect to fixed price delisting for holding companies also because they trade at a discount. There are so many of them which are still listed, but we've not heard from any delisting plans from anyone. Have you tried to understand from these companies in terms of, despite giving them a fixed price delisting and taking away the problem of the price difference from their subsidiary, why hasn't it moved forward? Second question is with respect to
Providing a framework doesn't mean that you have to delist.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true. And today private industry can really increase their involvement.
Benchmark indices closed lower but outperformed the mid-cap and small-cap indices. The Nifty fell 150 points from its intraday high. All sectoral indices except Nifty Bank and Auto ended the day in negative territory. SEBI will treat REITs and InvITs, which are like funds for real estate and infrastructure, as stocks. Also makes it simpler for companies to raise money and for foreign investors to buy Indian bonds. Air India cancels close to 50 flights in the last 4 days to be operated on Boeing 787 Dreamliner and the B777. The cancellations and mid-air switchbacks raise eyebrows, coming as they do after the tragedy on June 12th that killed 242 people on board. The Karnataka government proposes to bring an amendment to Karnataka Shops and Commercial Establishment Act to increase daily working hours from 10 to 10 from the current 9 hours, besides allowing more overtime hours. The Transport Ministry introduces a 3,000 rupee annual FASTag-based pass for seamless highway travel. Effective from August 15, the pass will be valid for 1 year or up to 200 trips, offering convenience to frequent travelers. Prime Minister Modi sets the record straight, clarifies to Donald Trump that Operation Sindoor was paused on Pakistan's request and not due to mediation or offer of a trade deal by the US. Meanwhile, the US president issues tough words for Iran amid the conflict with Israel, warning, "I've had it and next week will be big," says Trump. Meanwhile, the Federal Reserve is expected to keep the interest rate unchanged as the central bank remains firmly in wait-and-see mode as President Donald Trump attacks Fed chair, calling him stupid while he doubted the central bank would cut rates. And amid the escalating Israel-Iran conflict, 110 stranded Indian students board an Indigo flight as the government started the evacuation of stranded Indians from Tehran. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Over the next half an hour, we're going to take you through all of the latest updates when it comes to markets, national and international news. So let's take a quick check at how the markets are doing globally. A quick look at Wall Street. US markets are trading higher ahead of the US Fed's rate decision. Now the investors are also monitoring developments in West Asia. This is, let's remember, as what we are seeing at the moment with Donald Trump coming out and making a couple of comments on Fed rate and also talking about Iran. So we're likely to see the Fed rate actually be unchanged as the central bank is in a wait-and-see mode. Let me quickly go across to my colleague Pallavi for more on this, as the US Federal Reserve is likely to keep interest rates unchanged for the 4th straight time. This as it looks for more clarity on how recent policy moves, including Trump's tariffs, are impacting the economy. So far, steady hiring and cooling inflation have allowed the Fed to hold off on any rate changes. For more on this, let's go across to my colleague Pallavi.
The Federal Reserve will likely keep interest rates unchanged. That's according to most economists, as risks linger that inflation may see some surge back because of US President Donald Trump's tariff policies. Now, most trade negotiations are still underway and are incomplete, even as the July 9th deadline for the 90-day pause in tariffs that was announced earlier is approaching. Still, forecasters are a tad unwilling to change their already fragile economic outlook as far as the economy there is concerned. Rising concerns about US debt and a deluge of bond issuance fueled by the sweeping tax cut bill, the big beautiful bill as we've been calling it, has been passed by the House of Representatives but not by the Senate. At the same time, data that's coming in from the US still does not show any signs of stress in the American labor markets, which all the more is reason for the Fed to not have to budge as yet on interest rates or cut rates further. Now, in the meantime, consumers are expecting price pressures to surge in the medium to longer term. That's because economists continue to expect inflation to remain well above the Fed's 2% target, more so because of these tariffs, for as long as the next 2 to 3 years. What we are going to be watching out for, of course, is their commentary on growth as well as inflation, even if the Fed does not cut rates tonight.
Thanks so much for that, Pallavi. Let me quickly go across now to David Morrison, Senior Market Analyst, Trade Nation, joining us from London. Good evening from India, and thank you so much for joining us. Given the FOMC's recent decision to hold rates steady at 4.25% and 4.5%, what are your expectations for the next move? Will the Fed cut, hike or maintain rates through the rest of 2025? And what data points will be most influential in that decision?
Well, this is absolutely key. And as you so rightly say, there's no the expectation is 99.9% is the probability of no change tonight, according to the CME FedWatch tool. Now, however, this is a very important quarterly meeting. It's when the FOMC members also come up with their quarterly summary of economic projections. And within that, they give their forecasts for the rest of the year and beyond for GDP, unemployment, the Fed funds rate, and inflation. Now, looking back at March's SEP figure, back then, the dot plot, which is also part of it, suggested that FOMC members expect possibly 2 rate cuts before the end of this year. And basically, that is what the market is also looking for, with the first one probably in September, and then the possibility of a second one maybe by year end. So that's the sort of thing that markets are looking for at the moment. At the moment, they're going along with exactly what the Fed said back in March. So it'll be very interesting to see if anything changes in the summary of economic projections tonight. It'll be very interesting to see if the FOMC favor keeping their forecast at 225 basis point rate cuts, or maybe they deviate away from that. And the big question is, which way may they deviate away from that? Because a lot of analysts are privately or publicly, in many cases, saying that there may be 1 rate cut by the end of December, by the end of this year, or possibly none whatsoever. But the Fed are going to be very aware that there has been, although it's very early stages, there has been a slight softening in the employment data. That is to say that jobless claims, the weekly jobless claims, have been ticking higher a touch. The last non-farm payroll figure wasn't great. There were some revisions, and it wasn't a blowout figure like some have been. And at the same time, we have actually got inflation, especially measured by core PCE, which is the Fed's preferred inflation measure. That has come down quite sharply from 2.9% in February to February to about 2.5. I beg your pardon, 2.9% in March. I think it was to 2.5% in April. So what May's figure says is going to be very interesting indeed to see if we get that coming down further towards target, Although Jerome Powell has said previously that the Federal Reserve won't wait until they get to that 2% inflation target to cut rates. And we've seen that already because they cut by a full basis point in the last 4 months of last year. So I think, yes, it's going to be the inflation data that's important, but also I think employment. After all, that is the dual mandate that the Fed has to ensure price stability while maximizing employment.
Sure. David, let's talk about what's happening in the world, because we can't really ignore that, right? Instead of a clearer path laid out ahead, Jerome Powell and his peers sat down to news of increased geopolitical conflict in the Middle East, potentially pushing up oil prices, as well as ongoing uncertainty over tariff agreements with key partners, a downgrade of US credit by Moody's. So how are ongoing geopolitical tensions such as the Middle East conflict and these new tariffs factoring into the Fed's policy calculus and your own market outlook?
Well, I think they all give Jerome Powell and the rest of his FOMC members the excuse not to rush in to cut interest rates. And that's probably sensible. I mean, although the data is now sort of moving to suggest that a rate cut would be certainly helpful, and it's as far as President Trump is concerned, it's well overdue. That of course, all these other factors must play into the decision to some extent. The Fed just don't go by certain measures and say, right, that level's been hit, it's safe to go ahead and cut again or whatever. They have to take all these things into consideration. Now, on the tariff front, it is relatively early days to really measure any inflationary effect that they may have, because of course they've been postponed on a number of occasions. We haven't seen the full effects of tariffs come through, but nevertheless, there's sort of early signs that it may not be as inflationary as first feared. But as I say, we're still a bit of a way to go before that. We've got all the trade negotiations still ongoing, but at quite a relatively slow pace considering the deadlines that we've got involved here. But chief out of those, of course, is anything that goes on between China and the US. And the market was quite relieved to hear that when they had the meeting, when there was a meeting between the US and China, it seemed to go quite well, and there was some rapprochement, some agreement on both sides. Nothing's been finalized as far as I'm aware yet. There must be some more things to iron out, but there's progress, so that's good. As far as geopolitics are concerned, yes, I mean, this is another thing that the Federal Reserve have got to be very wary about. They may mention the geopolitical uncertainty, they may consider the oil price, although what I would say is that as far as their preferred inflation measure goes, core PCE, that excludes volatile items like food and energy. So I'm not quite sure how much emphasis they'll put on the geopolitical situation.
David Morrison, Senior Market Analyst, joining us all the way from London. Thank you so much for your time. Of course, the elephant in the room will be President Donald Trump's reaction if the FOMC once again refuses to heed his wishes in cutting the base rate, a comment that he's just made right now, despite the FOMC highlighting increased uncertainty around both inflation and unemployment. David, thank you so much for your time.
Thank you so much.
And back home, a volatile day of trade ended with Nifty and Sensex in the red. The Nifty barely held above 24,800 mark, while the Sensex slipped over 150 points, surrendering its early gains. All sectors except Nifty Bank and Auto closed in the red. Nifty IT snapped its 3-day gaining streak. Meanwhile, SEBI convened its board meeting today with a primary emphasis on enhancing the ease of doing business for market participants. SEBI Chief Tuhin Kanta Pandey made a whole host of announcements on co-investment opportunities for alternate investment fund industry and easier compliance norms for research analysts and investment advisors. Let's listen to SEBI Chief Tuhin Kanta Pandey clarifying the stance on ESOP norms being relaxed for startup founders.
Under the existing regulations, promoters are ineligible to hold or be granted share-based benefit, including ESOPs. If they hold such share-based benefits at the time of filing of DRHP, they have been required to liquidate such benefits prior to the IPO. Earlier, a provision was that at least all the holding of promoters had to be dematerialized. Now we are expanding that list. The following category of shareholders, they would have to be, we are mandating dematerialization of shares held by following categories of shareholders. Promoter group, selling shareholders, key managerial personnel, senior management, qualified institutional buyers, directors, employees, shareholders with special rights, all entities regulated by financial sector regulators, and any other category of shareholders as may be specified from board from time to time.
Now, tensions in West Asia are rising, but India is acting fast to evacuate its citizens. Around 110 Indian students, mostly from the Urmia Medical University in Iran, and nearly 90 of them from Jammu and Kashmir have crossed into Armenia and are set to fly home tonight on an Indigo flight. Meanwhile, Iran's supreme leader has warned the US that any military strike will have serious, irreparable consequences, rejecting President Donald Trump's demands for surrender. NDTV's Mohammad Ghazali reports.
Around 110 students, Sanjana, have boarded the flight today, and they're expected to arrive at early morning tonight.
Okay.
Like tonight and early morning from Qatar and via Armenia. They crossed the land border into Armenia, then flew to Qatar, and they have boarded the flight. And early morning tomorrow, at least, they will be here. And why this entire operation of evacuation will be very challenging now, because you see the tone and tenor of both US and Israel, who have been threatening Iran that it will face dire consequences until it returns to the negotiating table. And today, Ayatollah Khamenei, the supreme leader of Iran, has also hit back, saying that if US enters into this conflict, it will face devastating consequences. So it doesn't look so that there will be any player who can bring all the three parties to the negotiating table and bring a truce to the war. It is only going to intensify in the coming days. And amid all this, it becomes more challenging to evacuate more than 10,000 students, Indian students, who are studying there. In small batches, India is trying to bring them to a safer location outside Tehran, and from there through land border into Armenia. And after that, they are being flown back to India, as we know that the air routes are also getting impacted since Iran has closed its airspace.
Mohammad Ghazali, thank you so much for bringing us those updates. We'll continue tracking the latest with the Israel-Iran conflict. This is, remember, as we're seeing the first batch of Indian students return tonight. We'll continue tracking all of those developments and bring you the latest. Moving on, the Prime Minister arrived in Croatia on the last leg of his three-nation tour. Prime Minister Modi's visit to Croatia is the first ever visit by any Indian Prime Minister. In a post on X, the Prime Minister thanked his Croatian counterpart for the warm welcome. During his stay, the Prime Minister is scheduled to hold talks with Croatian Prime Minister Andrej Plenković and meet President Zoran Milanović. The visit highlights India's efforts to strengthen its relationship with the EU and foster cooperation across trade, technology and cultural ties. Meanwhile, Prime Minister Modi has also set the record straight on Operation Sindoor during his 35-minute phone call with US President Donald Trump. He clarified to Trump that India put a pause on Operation Sindoor after Pakistan requested. This comes after President Trump has repeatedly claimed that US mediated a ceasefire between India and Pakistan and offered a trade deal to India. Foreign Secretary Vikram Misri stated that this was the first discussion between the two leaders since the operation was paused. Misri emphasized that the Prime Minister firmly reiterated India's long-standing position, saying India has never accepted and will never accept third-party mediation. For further details on the call, let me quickly go across to NDTV Shivarur.
This conversation is interesting on so many levels, and there's a lot to unpack when two leaders like Modi and Trump speak for 35 minutes. Imagine how long that conversation actually is. Number one, of course, the context was set. The fact that it was a phone call and not a face-to-face meeting because Trump had to abruptly leave the G7 in light of what's happening between Iran and Israel. The fact that this is the first conversation really after Operation Sindoor. The fact that Prime Minister Modi, the big takeaway, of course, course, is setting the record straight, clearing any doubts about the suggestion that there was mediation from the US president's side and that there was absolutely no talk of any trade or any deal or any bargaining chips, diplomatically or otherwise, during Operation Sindoor, is something that the Prime Minister has cleared the decks on, settled the debate on, literally in a conversation with the man who made those claims, the US president himself. So it's very interesting, to see what the next steps in that conversation will actually be. I find it interesting that President Trump, moving away from protocol as he usually does, that is brand Trump after all, quipping and inviting Prime Minister Modi to stop by in the United States, on his return from the G7. Obviously, that doesn't happen on a dime. The Prime Minister of India is the Prime Minister of the world's largest democracy. He's busy. He's got a busy schedule as well. He can't suddenly divert his travel plans to stop over in the United States, no matter how important that relationship is. And it is a very important relationship, but he's got other work to do. But I think what this does really is set the stage for that next step. I think what the Prime Minister has done in these 35 minutes is clear the air over any lingering doubts over Trump and the United States administration's role in Operation Sindoor, and how what happened was a ceasefire that was forced literally only by Indian action and not because of any external mediation. That's the big takeaway from this.
And now it's time for our word of the day. Today we're unraveling the meaning of a term frequently heard during global crises: situation room. You've encountered it in movies, news and political dramas, but what does it really mean? My colleague Arushi is here to explain.
Ever wondered where the most powerful decisions in the United States are made during a global crisis? Welcome to the Situation Room. Hidden deep inside the West Wing of the White House, this high-security, high-tech command center is where the United States President and top officials respond to the world's biggest emergencies. It was set up in 1961 to ensure that the President is always connected to the military, intelligence, and global developments. From terror attacks to cyber threats, natural disasters to nuclear risks, with encrypted communications, satellite feeds, and secure video links. Wars are spectated here, and sometimes even history changes right here. That's the Situation Room for you, where pressure is turned into action and where every second counts.
And moving on, Air India has cancelled 3 international flights today, citing maintenance, technical problems and other operational issues. The affected flights were scheduled to depart from major airports, impacting dozens of passengers who are now being assisted with rebooking and alternative arrangements. The airline has apologized for the inconvenience and assured travelers that safety remains its top priority. But for more on the cancellations and how Air India is managing the situation, my colleague Aishwarya Patil now joining us with the latest updates. Aishwarya, many flights, I think close to 50 now that have been cancelled. They have been rescheduled just in the last 4 days. All of this, of course, raising eyebrows after the very tragic crash that took place on June 12th. But give us all the details. What's really going on and what does the airline have to say?
Well, as of yesterday, 17th of June, by afternoon already, the figure had crossed 66 flights, especially of the Boeing 787s, were recorded in terms of flight cancellations, delays, or mid-air return of flights. Let's give you a list of the number of cancellations that have happened. 66 I've already mentioned, but from June 12th to June 18th, which were the major ones that we saw being cancelled. So June 12th to the 17th, 83 wide-body flights were cancelled, including 66 787s is what we're hearing and what we're seeing from reports as of today. 66 of them have been confirmed to be Boeing 787s. June 17th, 6 787 international flights were cancelled due to ongoing inspections, and we reported on this also yesterday. And due to the Middle East airspace restrictions as well. As far as June 17th cancellations are concerned, AI 2491 Mumbai-Lucknow was cancelled amid heavy rains in Delhi and pilot duty time limits, as well as passenger accommodations that were managed. June 17th, AI 315, the Hong Kong-Delhi flight that was returned after takeoff because of a technical issue. Again, on June 17th, AI 180 San Francisco, Mumbai, that was grounded in Calcutta after an engine snag during an en route refueling issue. June 17th, Copenhagen flight was aborted when the pilot suffered a panic attack just before the departure. That was also reported. Now, June 18, which is today, 3 international flights, as you rightly mentioned. AI 188 Toronto Delhi was cancelled post boarding due to extended maintenance and crew duty time restrictions, because even pilots need their rest and do have to stick within their number of hours that they need to clock in while they do take the flights. Now, June 18, AI 996 Dubai Delhi flight was also cancelled after boarding due to a technical fault. June 18, another flight, which is the third one, which was reported as cancelled, was the AI 2145 Delhi Bali flight, which was turned back mid-air. This was, of course, because of a volcanic eruption near Bali, and the flight was landed safely in Delhi. So today's highlights were, of course, these 3 flights that were cancelled. 2 of them had maintenance and technical issues, but the other one was due to a volcanic eruption. These were the flights that were affected in the last few days, right after the Ahmedabad plane crash. Some of them, of course, had their legitimate reasons to be cancelled, and some of them were technical issues, diversions and cancellations, considering what's happening geopolitically as well.
Right, Aishwarya, thanks so much for that, and we'll continue tracking the cancellations and, of course, all of these updates and bring you the latest. But following this tragedy that claimed 270 lives, Indian travelers are increasingly concerned about air travel safety and aircraft types. A local circle survey revealed that 41% of Indians are now considering the type of aircraft when booking flights, while 59% also factor in airline brands. Additionally, 56% support the government grounding Boeing 7878 planes until a thorough investigation is completed. This reflects growing caution among travelers regarding aviation safety. And now news coming in with regards to the transport in India. Imagine cruising down the highway without stopping for toll booths or fumbling with cash. The Transport Ministry's new initiative makes this hassle-free travel a reality with the introduction of a FASTag-based annual pass. Priced at 3,000 rupees, the pass offers 1 year of validity or up to 200 trips. Transport Minister Nitin Gadkari says this move aims to make travel seamless, affordable and convenient for everyone. Listen in for more details.
3,000 रुपये में जो पास है साल भर का, उसकी अगर टोल पे किया जाएगा तो उसकी कीमत कम से कम 10,000 से ज़्यादा रुपए का टोल देना पड़ता था, वो केवल 3,000 रुपये में होगा। और ये जो वैलिडिटी है, 1 साल में 200 ट्रिप वो क्रॉस कर सकते हैं। इसके साथ साथ एक ट्रिप मीन्स एक टोल को क्रॉस करना। इसका फ़ायदा ये होगा कि 200 ट्रिप्स यानी 200 टोल क्रॉस करना होगा, और एक टोल क्रॉसिंग की एवरेज कॉस्ट केवल 15 रुपये पड़ेगी। कुछ जगह पर ये 80 रुपये है, 50 रुपये है, 100 रुपये है, तो ये केवल 15 रुपये हो जाएगी। और मान लीजिए एक टोल पर आप 50 रुपये भी देते हो, तो 200 टोल क्रॉस करने पर उसकी कीमत 10,000 होगी। उसके बदले में आपको केवल 3,000 रुपये में ये पास मिलेगा, एनुअल पास।
HDFC Bank's Chief Executive Officer and Managing Director Sashidhar Jagdishan has approached the Bombay High Court to quash an FIR filed against him on Wednesday. The FIR was filed on a complaint made by the Leelavati Trust alleging that he took a bribe of over 2 crore to harass family members of one of the Trust's members while the case was heard by a division bench of Justice Rajesh S. Patil and Justice A.S. Gadkari. The petition will now be heard on June 23rd. It's also important to note that HDFC Bank has previously claimed that the FIR was frivolous and filed only to defeat legal proceedings. The bank has been pursuing to recover loans from the Mehta family who own beautiful diamonds. And now news coming in from Karnataka, where the state government has proposed extending the workday to 10 hours with up to 2 hours of overtime, aiming to improve the state's business climate and competitiveness. Labour unions are strongly opposing the move, calling it modern-day slavery and warning that it could lead to worker exploitation, lower productivity and harm to workers' health. Now let's remember, this is the second state after Andhra Pradesh to actually propose a 12-hour working week. And that's a wrap on this edition of Profit 360. Stay tuned to NDTV Profit for all the news and updates.
Source is an ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
We're at the DLF Country Club in Gurugram. This is an address that is synonymous with luxury and elegance, and fittingly, I'm joined by Akash Ori, Joint Managing Director and Chief Business Officer at DLF Home Developers. Thank you so much, Mr. Ori, for taking time out. We're talking to you, barely days after you've sold out another record project here in Gurgaon, Privana North, 11,000 crore in sales. I cannot wait for you to show me and give me a flavor of what it is that DLF actually offers and what makes you charge these premiums and sort of bring this real estate market out of its slump and back to its back on all fours. Why don't you show us, give us a tour and give us a flavor of what DLF brings to this real estate market.
Sure. Thank you for having me on the show, and yeah, let's do it.
I've been living in Gurgaon for almost all of my life, and it's always been sort of a wish to come in here and see what the other side looks like, and it's a privilege now that you're here with me. Talk to us about Privana North. What sort of biomix are you seeing there? What is the sort of margins you're seeing in that project, and give us some timelines also.
So Privana, first of all, absolutely overwhelmed and very grateful for the support that we've got for the sellout. It is also a record of sorts because the scale of what has been done is never been done in this country. So over 11,000 crores of sales. Again, whether I want to get into in a week or 5 days and all, those are immaterial right now. I think what is important is that the huge endorsement for a DLF brand. The product is definitely the hero this time. Glass facades, 3.4 meters ground to ceiling heights, large decks. It's an evolution, every time you get better, and the Privana environment today, or the ecology there now, it's become, it is now something that has caught the attention for a lot of people,
Right.
And not only here, I'm extremely grateful for our support from our NRI customers, from the rest of India, and of course the Gurgaon NCR markets, which have wholeheartedly endorsed us.
What's the NRI demand you're seeing there?
Well, this time, our average NRI demands have hovered around between 25 to 27%. This time it's about 30.
Okay. Slightly higher.
Slightly higher.
Okay.
The price points this time are also higher. I mean, they're about 9.5 crores average, Penthouses are about 25 crores.
We are in DLF Phase 5. This is a sort of township that has evolved to be the center of Gurgaon, the Phase 5 part. Privana also we've seen now Southwest and now North come up. Is that going to be the next sort of center of Gurgaon?
This is going to be a very unique proposition because of almost over 100 acres of contiguous land.
Okay.
And I firmly believe that DLF is in the business of making communities, developing townships, making sure the infrastructure is commensurate to what your living standard should be, and of course making homes and dreams for you which you cherish for the rest of your life.
Under the Privana flagship now, about 25,000 crores in sale. Are we going to see more come up under that same brand?
Yeah, they're going to be a couple of more.
Okay.
As I'd earlier said to you, that there are about 116 acres of contiguous land. So these are now this is the third launch, and that is going to be the new hub. That is going to be the new Gurgaon.
In terms of your broader project pipeline for FY26, are we expecting more from the Privana brand within this fiscal year?
No.
Okay.
Not Privana. Right now we've got Mumbai to
focus on in terms of FY26 as well.
FY26, that's Mumbai, and then of course, as per our guidance, we've got other projects coming up. So I think that's what is going to take most of our time. Dahlias 2.0 will be sometime in December.
Talk to us, Mr. Rory, also broadly about the luxury housing market as well over the next 3 to 5 years. What do you see it as developing?
See, what is happening right now is, and I've said this before, I'm going to say it again, residential real estate has become a priority.
Yep.
Priority for people because post-COVID, people realize that, look, home is something that they want to go back to, rejuvenate, enjoy, relax, and should there be a need to even be sitting at home for some time, that is something that they should enjoy doing. So what that has led to is that people have wanted better and bigger homes. Today they are wanting to or they prefer, as real estate in other asset classes also, or even priority wise, it's become the number one thing to do.
Okay.
So what has happened is price has become a secondary situation here. Earlier you would look at a product and you'd want to know what the price is. Right now you look at that product, you see the features, the attributes, and you want to be there.
Yep.
And therefore, if there is a price to it, then you work around getting that story going. So that is something which is changed this time.
How is sort of Gurgaon's infra aligning with the real estate prices, especially with you sort of dictating the luxury real estate and sort of residential market? Talk to us about how Gurgaon's infra is aligning with that.
So, the good part about what is happening in Gurgaon today, Gurgaon is becoming the preferred choice for real estate investments across the world and in India.
Yep.
It's no more an NCR only preferred market. The rest of India is also looking at Privana. Happy to tell you, the Privana North launch this time has almost about 15% business from the rest of India. And about, almost 30%, as I said, from NRI. So what is happening is right now is the other good part is that the government is planning Gurgaon for the future now.
Okay.
So there's good infrastructure projects, there are things that are happening in terms of how to decongest roads, how are you going to be managing water issues, and amongst other infra-related matters. So government is very seriously putting all that together.
Right. Thank you so much, Mr. Rory.
Thank you.
It's
Thank you
always
for your time.
been a pleasure.
Likewise. Thank you.
Catching up with you. Congratulations on the Privana sellout,
Thank you.
Best of luck for your future launches.
Thank you again.
Welcome to NDTV Auto. Ivana Espinosa is with us, and we are really excited to talk about their global plans and India plans. Thank you, Ivan, so much for talking to us. My first question to you is, because there's so many things that have been going on about Renault, Nissan, and Mitsubishi tie-up, we want to understand, where does the tie-up stand right now? What is happening with Honda? Because first your conversations were on and then they were off. So we want an update. Where does Nissan stand right now globally?
Thank you, Mugdha. Thank you for the time. A pleasure to be here with you. Nissan is going through a transformation phase, as we have announced recently. We have launched our Re-Nissan plan, which is basically helping us transform the company by fixing the cost structure that we have. Yeah, and the other leg of this plan is not only about cost, but it's also about how we go to market, how we have redefined our product strategy, and how we have redefined the markets that we are prioritizing and where we are going around, how we are going around these markets. And part of that is, of course, India, which is a key element in our strategy. And to be clear from the beginning, we are in India to stay. We have a long time relationship with the Indian market, and we're committed to them. And we have a very clear plan. Our road to resurgence in India is very clear, with a clear plan of product, with the capacity secured, and we have wonderful cars in the pipeline that will come on time and will be segment leading. So this is what it comes to India. Now, to your question about the partnerships, the relationship with Renault is very strong. And part of that is what we're doing actually in India. We are collaborating very deeply with our partner Renault, and we're also developing products, producing products in India, not only for India, but we will go from India to the world. We have a very ambitious plan of exporting from India, and this is where we stand with our partner Renault. Mitsubishi Alliance is also working very well. As part of our Re-Nissan program, also we announced several initiatives of what we're working with them, particularly centered around EVs and battery co-development, as well as commercial vehicle collaboration. And with Honda, we are exploring new intelligent vehicle technologies around software, around battery technology, and we keep working with them in several projects as we speak. So the relationship with the partners is the third pillar of Re-Nissan plan, and we are very actively chasing this one. Yeah.
You know, Ivan, we have been hearing this, that India is a very important market. And when the ARC plan was announced, then too, India was mentioned specifically. But my question is, if India is so important, then what was the reason for you to sell stake in the manufacturing plant to your partner Renault?
It was simply a rebalancing on our share structure, but the priority of India hasn't changed. We have, as I said, a very good relationship with our partner Renault. We have secured the product pipeline, and we have capacity that we have agreed with Renault. So we are in India for India to stay in the future with us, and we are committed and sure that we will be delivering exciting cars to the Indian consumers.
Ivan, I want to ask you this a little bit, maybe bluntly. See, from where we stand, when we see Nissan in India, first of all, your product portfolio is limited, to say the least. And it has been like that now for not 1 year, it's many years now that it has been like that. Then the products that you are bringing in, your partner Renault is also working on the same kind of projects. So how do Indian customers believe in your identity? What does Nissan stand for in India? If a person is in the market, maybe even when you launch your new products, right now you have only one product, but when you launch new product, then too, they have the same option with your partner. So where does Nissan stand? What is it that Nissan brings to the table?
Yeah, well, we will very quickly move from a 1 or 2 product company to a 5 product company in India. And these products, as I said, will be segment leading. These are products that were designed by Nissan designers and worked upon with the planning team in Japan. So these products are delivering what Nissan stands for. Of course, there's a partnership that we are working with Renault. Products are engineered together in the R&D BCI center. So these are products that are co-engineered in the center and produced in RNA IPL. So it's a fruit of the alliance, and it's, I think, a very good symbol of how we can collaborate within the alliance to provide value to our customers while we protect our identity. Good example is Magnite. So Magnite is also a fruit of the alliance, and it's a car that is full of its own identity, and it's a very successful product that describes very well the attributes of Nissan, because we take a lot of care on making sure that the Nissan attributes are protected in every single product that Nissan does. Either it's engineered in Nissan or it's engineered together with a partner, like it's the case of the products that we will be launching in India in the near future.
You know, you spoke about how you want India to be your export hub as well. Wouldn't it have been a little bit better if you had a little bit more stake in the manufacturing plant? And what is the current structure of your arrangement with Renault for manufacturing?
Yeah, I think the shareholding arrangement doesn't change what Nissan can deliver in the market. Yeah, this is just a business discussion that we're having with our partner. And it's something that is not affecting our competitiveness, our time to the market, or our capability to bring very competitive and exciting products to our customers. So this has been secured in the discussions that we have with Renault. We have enough product in the pipeline. We have the right capacity, and we are very excited to roll out these products, which, as I was saying at the beginning, are engineered by are designed by our designers in Yokohama, co-engineered in India, to bring the best of the best that we can into the Indian roads, and also to take advantage of a great competitiveness that we have in India to export to many, many markets. To give you an image of how much we will be bringing outside of India, we're targeting around 100,000 units to be exported out of India towards the end of 2026, 2027. Yeah. So it's really important.
Okay. Now, I'll tell you something. Indian market is as any other market as well, but I think Indian market is changing rapidly. We see companies now bringing their facelifts much sooner because customers demand that. With the current structure, as we understand, I think Indian calls are mostly routed through Europe. So how nimble are you to change your plans or adjust to customer demands in India?
Actually, very nimble, because it's a beauty that we have the engineering center there and the factory as well. So we are very reactive. We can move very quickly. And the fact that we have two companies, two partners working behind, it's adding to this. Because if we identify something that has to be updated, we can leverage on each other and bring these solutions quicker in a more organized and quick fashion with cost competitiveness to deliver a great car to our customers. So it's really a good setup that we have. So from the outside, it might be seen like the relationship is weakening, but it could not be more far from this. Yeah, the reality is we have a very close relationship with our partner Renault, and we are very happy and excited to bring these cars to our Indian customers and also use the Indian competencies and capabilities to bring the products outside of India.
You know, I'm gonna say something here. You said that you're very nimble, but the history doesn't show that. Magnite has been in the market for some time now. Yeah, there have been some facelifts, some updates on the Magnite, but the product launches themselves have taken way too long. So much so that customers have almost forgotten Nissan. There's just one product, only one segment, and there too, your positioning is on the value side with Magnite. How are you going to attract Indian customer where it's just not about value, but about Nissan's products, and products take center stage and not the cost that they come at?
You know, there's this saying that there's nothing a great product cannot solve. And in the next 18 to 24 months, we will have 3 new cars, very well centered for the Indian market. We will be having an MPV, and right after that, we will have a C-segment SUV 5-seater, and after that, a 7-seater SUV, which will be, as I said, segment-leading cars. And the proof of that is that it will not only be sold in India, but it's going to major markets around the world, leveraging, again, on the technology and the quality of what can be built in India.
Okay, now let's talk about one of these products is EV as well, as we understand.
Well, these vehicles that I was referring to are not EVs. These vehicles are coming before that, and of course, we are revisiting our portfolio for the long term to see how we bring some exciting electrified vehicles to the Indian market later on.
So are you planning to get India-specific EV, or because you have EV products in your portfolio, that's something that you're planning to bring?
Now we're analyzing options. As you know, in our lives as OEM and vehicle manufacturers, we need to look at different alternative scenarios. Mm-hmm. And of course, as you said, we have very good products already in the global portfolio, but we could be exploring also what we could be doing with the partners in India or by ourselves as well. So we have several options that we could explore and consider.
So now you're saying that next 1.5 to 2 years is going to be very exciting for Nissan. You have 3 new products coming up. How are you preparing for these launches in terms of strengthening your dealer network, in terms of strengthening your service network? What is your plan in terms of even making Nissan a more prominent name in the Indian market?
Right. Well, we have very loyal partners, and this is something that we are very grateful for because they've been very patient, as you said, with us. It's been some years of product draw, and that we are now changing. And I think we have very competent partners. We will be dedicated to training them and giving them all the resources that are necessary to launch these products properly and to have a great customer service and customer satisfaction, which is one of the unique things that Nissan is very strong at in the Indian market. Yeah, so we will keep protecting this and build on that strength that we have by adding now the new vehicles in the portfolio. And as I said, ensuring that our partners have the right resources, the right support and training so that these vehicles are a complete success.
What is your investment plan in India? How much are you investing in India?
Well, we have already invested over 700 million euro in these vehicles that I was just talking about. So the commitment, as you can easily see, is very big. So we are committed to India, and the investment proves what we're saying. So we are really walking the talk, as we say.
Okay, and in this. When you sold the manufacturing, and you sold your stake in manufacturing plant to Renault, has there been a financial transaction around it?
Well, part of a deal we announced before, and part of a deal, it was a combined deal of several things that we discussed with Renault. Shareholding was one of them. We have back then agreed to make some investment in Ampere, which we decided not to do, or agreed with Renault not to do. And rather, we are using that investment to fuel product in both sides. So rather than putting the money into the cross-shareholding, we decided to activate both companies' development teams by using these resources to build more value for both companies.
Okay. Now, in your strategy for India, now these products you've already decided, we have heard about them several times, but going ahead from here, what is your powertrain strategy? You said that you are evaluating EVs. Is hybrid also something that you would consider for India?
Well, we are observing the market trends, and of course, there are several options, as I was saying before. Hybrid is one of the things that we are observing very closely, together with potentially battery electric vehicles. Yeah, so we're looking at both.
And by when do you think you need to decide? Like, what are your timelines internally for making a decision for India? What is your product strategy going to be from here on?
Yeah, well, for the moment, our focus is to launch these 3 cars that I just mentioned to you. This is the focus that we have now, making sure we reinvigorate and revitalize our partners, our dealers, make sure we have a sustainable restart and reborn of a Nissan brand in India. And this is what we are dedicated for at the moment.
Going back to your dealership network, do you think with the 3 products that you are coming up with, the current dealership network suffices, or are you planning to expand it? What is it that your strategy there?
Yeah, for the moment, I'm not aware of any plans to change the network. As I said, the focus is to launch with the vehicles that we have utilize the partner base that we have, which, as I said, is very loyal and has been with the Nissan brand for long. And it's time for us to bring them the right product so that they can make a good, sustainable future.
With these 3 new products, what is the market size what is the market share that you would like to have? I'm not saying what would you get, but what would you like to have?
I don't have the market share in mind, but the image of volume that we are seeing with the 3 new cars is to get around 100,000 units in total. Yeah, so when you look at the numbers, it's around 100,000 units for India and 100,000 units to be exported out of India. So these are the high-level targets that we are considering for the moment.
Okay, now let's talk about your EV strategy. Nissan has talked about solid-state batteries for a long time, and there is a timeline that you had said. But does Nissan is still continuing with those timelines, 2028, and what's happening on that?
Yeah, we continue with the targets that we have announced. We keep working on our all-solid-state battery because we do believe this is a game changer. That will really change the way EVs are built, with the density that these batteries can have, and the size, because of having more density, energy density, the size of the batteries are much more compact and lightweight. So the way you can create a car really changes. Also, the speed of charging is a real difference, as well as the way you engineer and develop the car. So it can really change the acceptance and the acceleration of the battery EVs, and that's why we are continuing to invest actively on the development of this technology.
All these geopolitical tensions brewing across the world, how is that impacting business? Of course, there are many unfortunate wars happening right now. But besides that, there is also an imbalance on the trade side where different countries are coming up with different restrictions. For example, China had a rare earth magnet restriction. How is that impacting business?
Yeah, well, it's making our lives as OEMs a bit more complicated, as you highlighted. The beauty of Nissan is that we are a very global company. Our footprint is pretty wide. So we have operations in most major regions and markets across the globe. And this allows for flexibility. The other thing that helps is having partners, yeah? So we can work together with partners that, in the case we have a specific regional constraint, we can work together with partners to build scale together, like the case of what we're working on with Renault in India. This is a very good example of how you can leverage together with a partner to make very good competitive product and building scale together. So this is the other beauty of what Nissan has. So we have this wide coverage around the world, and we have a very reliable network of partners that we can work on together to make very competitive and exciting products. So this is a way of us coping with these regional geopolitical tensions that exist in the world today.
Ivan, I know you took over Nissan some time back, and you have now seen Nissan in its global form. Nissan has one name which has been in the market for a long time, was always a haloed brand, known for reliability. But now in this fast-changing world, what do you think, because we have lost very little time left, so what do you think are your key challenges, and where do you see opportunities that are going to propel Nissan, and what will Nissan look like, say, 5 years down the line?
Well, in the short term, the challenges, as I was just mentioning at the beginning, is to execute our re-Nissan plan. We need to bring the company back to its right footing. And once we have this stability, we will be able to sprinting forward. And the beauty, as I was saying, of Nissan, you were asking about the strengths. One is our worldwide footprint and the coverage that we have, which allows us to pivot and move around the different geographies to have a stable business operations around the world in an efficient manner. So this is what we will be working on. Then, as for the future, the beauty of Nissan, as you said, is we have a lot of innovation. We have a lot of technology. And this company, our company, is very, very capable in terms of engineering and technology. So we will keep investing on this. You mentioned about solid-state battery, but this is just one piece. Our company is very, very strong when it comes to autonomous drive technology, when it comes to software and connectivity, and of course, electric vehicles, which is part of what you were asking. So we will very much actively keep investing on these areas because this is the future of the automotive industry. And I would love to see Nissan becoming the top player, the top Japanese player in terms of the intelligent vehicle. Yeah, this is for me the future of the industry, and this is where I want to bring Nissan forward.
All right, Ivan. Thank you so much for joining us today and taking time out to speak to us. Thanks a lot.
Thank you. Thank you for your time.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. Once the proud flag bearer of India in the skies, synonymous with luxury and hospitality, famously known as the Maharaja of the skies, Air India today stands at a turbulent crossroad. A deadly crash of the Air India flight 171 in Ahmedabad on the 12th of June, which has claimed the lives of 241 people on board and tragically taken dozens of lives on ground, has jolted not just India and the aviation industry at large, but the world. It's one of the deadliest air tragedies that has been seen in years, and the first fatal crash of a Boeing 787 Dreamliner. The tragedy has reopened questions about safety, accountability, and the very soul of a brand that was supposed to be in the middle of a grand revival ever since its acquisition by the Tata Group. Now, following the Ahmedabad tragedy, troubles are only mounting for the carrier. 83 Air India flights have been cancelled in the period between June 12th to June 17th. Out of these 83, 66 were the Boeing 787 variants as per data released by the DGCA. In fact, just yesterday, 13 flights were cancelled in a single day. This comes after the DGCA mandated enhanced safety inspections in light of the recent crash. As per the DGCA, a one-time check should be conducted before the departure of Dreamliner flights, which includes inspection of fuel parameter monitoring and associated system checks. Meanwhile, the aviation regulator has clarified post a meeting with operators of Air India that there are no major safety concerns found with the carrier's Boeing 787 Dreamliner fleet. However, the regulator has flagged maintenance-related issues about spare parts availability, but the damage perhaps has already been done. Anxiety around air travel has increased, and tour operators and travel agents are reporting a 20 to 25% drop in Air India's business in the aftermath of the unfortunate crash. Meanwhile, calling it a heartbreaking tragedy, Tata Sons and Air India chairman N. Chandrasekaran has said the incident needs to be seen as an act of force to build a safer airline and has urged the staff to stay strong and determined during this crisis. The Tata Group has also announced a 1.25 crore financial support for the bereaved families.
But even before the crash, Air India was facing a long list of troubles, from diverting flights due to unserviceable washrooms, assigning passengers broken and uncomfortable seats, a lot of social media backlash. All of that was already building. So the big question we're asking today, has this tragedy marked a turning point for one of India's most storied airline legacies? Can the Air India brand recover, and how big is the hit? To speak on this, I'm joined today by Sanjay Lazar, CEO of Avialaz Consultants. He's an aviation expert, and joining us from the airport, Jitendra Bhargav, former ED at Air India and the author of Descent of Air India on the show. I'm speaking with Ajay Aftani, editor of Live from a Lounge.com, Dilip Cherian, Image Guru, and Madhav Oza, MD and Director at Blue Star Air Travel Services. Let's first start with what details are coming to the fore. And Madhav Oza, let me start with you. As a matter of fact, the question that everyone's been asking each other, would you right now book a flight on this airline? Would you fly a Boeing, no matter what the airline? And you actually do have some sites which have this filter on whether you're flying a Boeing or an Airbus or the kind of aircraft. What are you seeing in terms of statistics on your portal?
See, as far as I am concerned, I'll definitely fly. But if we look at the Indian passengers right now, since 12th of June, passengers are basically asking a couple of questions, is that what type of aircraft are we flying? So that is a major concern now. People are wanting to know, is it a Boeing, is it a Dreamliner? And people are a bit worried, and because of this, the trend on our portal right now is we have seen the past bookings which were done on Air India. Almost we have got more than 20% cancellations, and fresh bookings we can see a reduction of 30%. I will say put together it is 50, but 15% I will attribute it to the Middle East war also. So overall impact is almost, you can say, 35% reduction in the Air India passengers as of now.
Okay, so that's just in the last 3 or 4 days. There's an impact on Air India passengers, says someone who runs this service. I have a survey here, and it's a local circle survey which has surveyed 40,000 responses. It says 41% Indian air travelers surveyed are now looking at flight aircraft type before undertaking air travel. 56% surveyed in this particular survey are in favor of the government grounding the Boeing 787 till all issues are investigated and sorted. Now, in terms of a reputational hit, Dilip Cherian, let me come to you on that. And of course, it's a storied company. No one has any question about, the passion of the Tata Group. The chairman coming and saying that we will fix this, we will use this opportunity to build a safer airline. But the scale of the horror on this crash means that people are going to be worried for a while.
Amanda, I think that there's no doubt that the image of Air India has taken a substantial hit. The transition to the Tata ownership was meant to raise the bar. And if you ask me, and having looked at comments over the last many months, not just after the crash, I have been seeing that there is a distinct and very definable problem as far as the image is concerned. It's just got worse after this. I don't think it has anything to do with aircraft types. It's got to do with people having confidence in what the company is doing at the moment. And that to me is worrying, because when people are flying, I hear what you've said, that more people are checking aircraft type. And I have a wife who always, by choice, would pick a Dreamliner because it's quieter, more efficient, and she has complete faith in that machine. But as numbers grow, and as what the stats don't lie, but as far as Air India is concerned, I think expectations of image built upwards by Tatas has simply not happened. Everyone is saying it will take time, there's an overhang, and we should be patient and wait. People have waited for a long time, and customers who have global travel have many choices.
That's an important point, Dilip, and I'm going to drill down, because it's been 3 years since the Tata Group took over, and this is a very unfortunate incident. We have to wait for the investigation. Was it a Boeing issue? Was it an Air India issue? Was it a pilot issue? Was it a maintenance issue? We don't know. So we're not going to get into that right now. But even before the fateful day of 12th June, just open social media and it's abounding with complaints about Air India. I mean, there are international bloggers showing that this is what I get when, I book a first class seat. And that really is a problem, isn't it, Dilip?
Guilty as charged, because I actually flew on one sector and my wife said, never again on Air India. And we switched to a different airline to return at a substantial cost. But the thing is that these are things which the Tata Group would have found easy to fix. And what is the lowest hanging fruit as far as that is concerned? Giving passengers the meals and the service that they expect. I have no complaint with the Air India staff. I think they've been retrained or they are on point and they work fabulously. So this is not about service. It's about what they have to offer. And as far as the insides of aircraft are concerned, the trope that seems to be prevalent among travelers is that the company is waiting for its new aircraft to come in and, like the hotels, refuses to do any upkeep and maintenance till such time as they can do everything. That simply is not the kind of image that you want to have in the service industry today, where customers are fussy, but also customers are now visible. And individual customers' complaint becomes the lead motive of a company. And that has enormous damage-causing consequences.
To be fair, it's not that other airlines don't have complaints from their customers online. Everyone does. But Sanjay Lazar, you put this into perspective for us. There are a few ways of looking at it. One is how Air India has handled things so far, and the fact is that they were on the ground, the team, the top boss was on the ground immediately. They've talked about, compensation and been on top of all of that. But flyers are going to be worried for a while. Let me ask you up front, should flyers be worried?
Tamanna, you're right. Flyers are worried. And the fact of the matter is, flyers do not need to be worried. The Dreamliner is still one of the safest aircrafts. I'm at a London airport right now. I flew in 2 days ago. I flew Air India and I will always continue to fly Air India. This sector, of course, is Ryanair. But be that as it may, let's understand that Air India and the Tatas are in mourning. There is a huge shock. They have not experienced this, though the Air India culture has seen tragedies 40 years ago. A lot of the people currently in the airline have not seen such, the scale of such a tragedy. It has disturbed a lot of people. The DGCA has last night issued a statement. They checked 27 of the 35 Dreamliners are absolutely, you yourself mentioned, there's no problem with them. Please understand, I've been through tragedy. I lost my entire family in the Kanishka. I was a union leader in Air India. I've attended 2 tragedies of the Air India Express. I've seen how it impacts people.
I want to come to Jitendra Bhargav on this. Obviously, give them time. They're going through their checks. But Mr. Bhargav, think about it from a passenger's point of view. Not everyone is an aviation expert or understands this or understands the technicality. I mean, even if there is a 1% chance, why take the chance if there is an alternative? Would it have been, in your view, better if the DGCA maybe had taken some time before giving a clean chit to a bulk of the Dreamliner flight? I mean, that thought came into my mind. It's been, 4 days? And you've said you've checked everything and everything is fine, ship shape. Would it have made sense to say, okay, let these planes not fly for a bit. Let's take some time, check it properly in a way where there is faith restored?
Manna, let me give it a broader perspective. Ahmedabad air crash was not the first one in the industry. Every airline that has a crash gets asked with similar questions regarding safety. And they eventually bounce back after people realize you can't be determining safety track record of an airline on a one-off incident. You look at it from a wider perspective longer, and as my previous speaker very rightly said, it takes time. But what has happened here is probably lack of communication from Air India. When you have a lot of cancellations to which you alluded in the beginning of your introductory remarks, that how many of these were related to the grounding of aircraft to necessitate detailed checkups by DGCA and Air India's engineering department? Because unless you share it and put it in public domain, that of the X number of cancellations that have taken place since June 12, so many can be attributed to the grounding of Dreamliner so that they are available for checks. And the rest of it, further saying, passengers will take time. And this incident, because it happened during broad daytime, television is playing up the thing. So this can't brush it off the public memory kind of thing, will take time. But what could have Air India done in the circumstances?
But may I just intervene on one point? And you said that these things happen. It's not the first time a crash has taken place. I agree. But to this nature, where few seconds after takeoff, this plane just goes down.
No, Tamanna, look,
it's truly shocking.
Accidents of all kinds if you were to analyze it. There are many accidents at the time of takeoff and they've taken place. There could be different circumstances, it's a different matter. But what I'm talking about is passengers' perception of an airline and the traumatic effect that they go through. And how long do they take to come back? Now, if you look up the past accidents of different airlines that have taken place, you'll find they've gone through a similar kind of cycle. It takes time for people to come back, and then they said, yes, this airline has a track record which is safe in a longer perspective. As one has very often said, there are 2-3 parameters on which safety is judged. How many accidents has an airline had for every million passengers flown or every million takeoff and landing? Air India wouldn't stand anything badly compared to other airlines.
Agreed.
Now this, as I said, has happened. DGC has made a point. And let me just make a point here. I was going through a chapter in my book written 10 years ago, Nightmarish Dreamliner. I spoke about 2 Dreamliners being on ground for 10 months and they did not move because of the spare parts. And today DGCA is to flag the same issue. It speaks poorly of both Boeing, airline, and or even the regulator, I would say.
You know, this is a very key issue. If this is a Boeing issue, and it's possible there is a startling piece by the Wall Street Journal today, and I don't know if people on this panel have had a chance to see it, that says the very initial reports, and they've quoted their own sources, talk about problems perhaps with the engine. The emergency engines could be coming in. Like I said, Ajay, we're not going to speculate on what has happened because we just don't know. But say in investigation, it turns out that this is a Dreamliner issue or a Boeing issue. Now, Air India, with so much of its fleet populated by Boeing and Dreamliner specifically, then faces a whole other challenge, isn't it?
I think, you're correct there, Tamanna. But the thing is, it's all at this point of time in the realm of speculation, right?
Yes.
So, look, whenever the truth comes out, and this was my statement on the initial day, it's going to be inconvenient for somebody. Is it going to be inconvenient for the airline, or is it going to be inconvenient for the OEM or the engine maker? We don't know at this point of time. And we have roughly about 20 days to get a preliminary assessment of what went wrong. We got to realize that, like Mr. Bhargava was saying, the airline has an excellent safety record. It did not have an excellent record on keeping the upkeep of the planes, which was under the government institution, which the Tatas are trying to turn around. But safety, non-compromised. Safety and upkeep are 2 different things here. That's what I want to bring to the fore.
But Ajay, just for a second, let's think from a passenger point of view. You're an expert on the field. Think about it from a passenger's point of view.
Yeah.
At the end of the day, do they really want to be in a position where you have to look back and think, was it Boeing, was it Air India, was it the company that makes the engine? You just want to be safe. The first response is going to be to withdraw and withdraw quickly. What in your view needs to be done to assure people that it's all fine? And do you think that the DGC and what they've said last evening is going to be enough?
So I think, here, what perhaps we need more of is Air India coming out and fighting their case in the sense they should not comment on the investigation. Obviously, that is something that is, it's as we call it in the judicial terms, sub judice at this point of time. Nobody knows what happened, so we should keep that aside. But beyond that, the airline has a good track record, and what we need is more of communication from the airlines to all the passengers, to the frequent flyers, something reassuring, to tell people that, listen, this happened. We are an airline in mourning right now, but there is more. And this has been a safety record for the past so many years, and you have nothing to worry. at this point of time. So I think they're not doing that. And obviously, unlike some of the other airlines, I think there's no persona they have on social media of their own from the management and so on. So a lot of people obviously kind of find it easy to just kind of come and give them unasked for advice on social media about, don't do this, don't do that. And it kind of gets lost. There's no humanity to the airline on social media. They're not able to defend themselves. So, social media is obviously full of chatter and talk comes easy.
I don't know, Ajay, one minute. That a company or a group the size of the Tata Group and a brand the size of Air India is some defenseless entity on social media, cannot come and defend themselves. I don't know. Dilip, you want to come in on this? This is the point at which you have to come and say.
I think
yes, this is my case, or maybe right now they're not sure that there is a case to be made or what that case is.
See, this airline in mourning, we understand, we respect. But I think that we've seen the kind of speech that the CEO gave. We've seen what the chairman said. Now, they need to understand that passengers, customers, even regulators and global aircraft manufacturers and competitors are all looking to see what their response is and how they respond as a company. Expectations are naturally high because this is the Tata Group. Boeing may have had its problems, but don't forget the Dreamliner and several other products are marquee products. Now, irrespective of what the investigations show up, we need companies to recognize that their voice is what customers are listening for. And how they respond at this point of time will, in a sense, define their character going forward.
Okay, just on that part of response and the kind of faith that you need to bring back. Madhav Oza, as someone in the industry, I want to know your point of view. What is the kind of feedback that you're getting from passengers right now? And at the end of the day, like we've seen with all air travel passengers, after a few days, they go where the most convenient flight is, the best prices are, and the routes that are available. Do you think we come back to that? Because think of it this way, Air India has 30% of the market share, and it is available on routes that many other options and alternatives are not perhaps at that price point.
I agree with you, Tamanna. The most important thing what Dilip said just now is lack of communication. Like as you mentioned in your early remarks, 83 flights were cancelled or due to some or the other technical slag or maybe a emergency landing or a U-turn. So what I would say is the lack of communication on part of Air India. I spoke to a few passengers, like today morning at 3 o'clock, one of my passengers has flown from Ahmedabad to London on Air India, and his flight was booked for 13th. From 13th to the 16th, he didn't have a proper communication. So what is important right now is, as of now, is a better proper communication. And to control the damage what is happening, they can endorse the tickets to different airlines, let the passengers get a relief. That communication is very important, what Air India should take up, and that image will be very important, because people on social media will talk that today my flight was cancelled again, I was not offered any coupon for lunch, dinner or a room accommodation, nothing was offered. I was just told point blank, you are a local, go back home. So this attitude has to change. You don't have to see your money at this time. That's why we need people and houses like Tata's who have deep pockets, who can take control of this bad situation, because this emergency situation can come across in any airline across the world. So that this is the time when you need your deep pockets to really accommodate people absolutely on time.
I mean, sure. Go one step above and beyond in terms of really showing that generosity and hospitality. The other part of this, and Mr. Bhargav, let me come to you on this, is the Boeing angle. And like I said, this is either, Air India reputationally would be taking a hit, because already people have been complaining in very loud voices about the kind of, experience that they've had. And then now the safety angle. From the Boeing point of view, what has made it worse is that there is documented questions about the Dreamliner, about 787. There's a whistleblower testimony. The whole world has now seen it. And then the question that comes to mind, this is something clearly that Air India also knows about. Is there any hint of suspicion on the aircraft and on Boeing itself? And if so, then now what are we doing about it?
Well, now let's go back to 2011 when this aircraft was put in operation. Boeing, after some kind of battery-related issues, grounded the entire fleet world over. They rectified the situation and everybody started operating the flights as normal. Now, must I go back to the whistleblower's statement made 10 years ago on what apprehensions he expressed, or look at the actual data of performance with multiple airlines when there are 1,100 Dreamliners operating? I will certainly vouch for the actual safety performance of airlines rather than go by what the whistleblower had claimed. So this is very clear in my opinion. I've given a parallel example. 737-8 MAX had 2 fatal accidents, Boeing grounded, airlines grounded them. Now, after rectifying all mistakes, all kind of problems, shortcomings in that aircraft, Boeing has started delivering this aircraft again. Now, should anything untoward happen with 737-8, with any airline in the world, media and others will naturally rake up those previous instances when there is no need for it. Because we must look at it. Boeing has rectified, likewise the Dreamliner. Safety track record of the last 10 years. And to me, that matters and nothing else.
No, so are you saying, Mr. Bhargav, that there is no question and no worry on the Boeing right now, the Dreamliner? People should now eyes shut, go ahead, book their tickets.
Plenty of it. The Boeing shares took nosedive very heavily on the day of the accident.
Yes.
It will happen and it will reckon. And as I said earlier, you can take up any track, any safety, any accident anywhere in the world. The scenario is repeated. The questions about safety
let's just round up. Mr. Bhargav, if you have a choice between a Boeing and an Airbus, all other factors remaining the same, which one will you choose? Will this be a factor for you at all?
Look,
while flying
I will
next?
travel what is convenient. We don't judge it from an airline. This aircraft manufacturer's aircraft is deployed on a certain sector, so I'll fly. Whichever aircraft is. And as an airline person, I have total faith in the airlines because no airline would fly or operate with a risk kind element in it.
Okay. Same answer by Ajay, I'm assuming.
With 100% safety.
Same answer from Ajay, and same answer from Ajay, I'm assuming, because you're someone from, who knows the industry well.
No, so Tamanna, I actually got on a Boeing 737-8 approximately 3 hours after the incident. All I have to say about the Boeing versus Airbus debate is, look, there are qualified people on both sides of the, in Europe as well as in the US manufacturing these aircraft. Things happen. The whistleblower allegation, I've gone through it over a period of time. Let's remember, the foreign object debris issue was about the Charleston the factory of Boeing. It was not about the Everett, Washington factory. And this aircraft and many after this were all assembled in Washington state, not in the new factory that Boeing established later. So I don't even think that's something, connected to this issue on hand. And, people will obviously find something to rally behind. They don't have the full picture. I get it that people are feeling unsafe about Boeing and Air India at this point of time. But the thing is, lightning doesn't strike twice. And this is a whole lot had to go wrong on that 30 seconds that day for that incident to have happened, Okay. This is not the normal course of how an aviation industry works.
Same answer but elaborated. Madhav, you said right in the beginning that you don't care, you'll fly on a Boeing or an Airbus, doesn't matter.
Exactly. Only point of worry is Boeing has been doing a lot of cost cutting, and maybe they are compromising on the safety standards. That's
will you as an individual?
I won't mind traveling Boeing.
Okay.
Because if you see last 20 years record, it is 55:45 Boeing and Airbus ratio of accidents.
Okay, Dilip, what about you? You're the only, I think, non-aviation industry voice here.
I voluntarily travel Boeing with happiness. There's no problem. Air India, as I said, my problem is with the corporate response to it. It's an airline which gives me great choices and great connections. And, as Praful Patel recently said on TV, this is an airline which has given Indian travelers so many choices that we are truly spoiled. Domestically, I think we need more choices. We are getting to a duopoly situation.
Okay, there are Boeings across all airlines. There are complaints with service quality also across all airlines. Let's be very honest about that as well. So there is a lot that the industry needs to do. But in this case, I suppose for passengers, it will take some time to get over the shock of this horrific and extremely unfortunate accident. Thank you so much to all of you for joining us on the show today.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Mis-selling. It's a problem that a lot of us face, particularly in one particular segment of the financial market, and that has to do with life insurance. A lot of the time, you are sold a product that doesn't necessarily work for you. It doesn't fit your requirements. It is sold because there is a considerable incentive for the person who is selling you the product. We're going to talk about the various ways in which insurance is currently mis-sold so that you're aware of what questions you need to ask the next time you are, or next time somebody attempts to sell you these policies. And also we'll talk about a few other data points that will put this into a very sharp light. Joining me in studio today is Kanan Behel, who's the founder of FinGrowth. And Kanan, you've done an interesting report. You've taken data from the annual reports of various life insurance companies, and you've tabulated a lot of anecdotal evidence as well. So let me start, before we get into some of these data points, on the ways in which mis-selling takes place primarily. And the banking channel route is something that even the regulators are now looking at very closely because there are issues with regard to how some of these policies are being sold. So in your opinion, first of all, thanks so much for joining me. What are the top ways in which these policies are mis-sold?
So first of all, if I have to particularly talk about how policies are mis-sold by the bank RMs, first is that it is not told that the person who is supposed to pay the customer has to pay the premiums for not just the first year, but the subsequent years as well. So what happens typically is, like, I have met hundreds of people and helped hundreds of people with their personal finances. And this is what I've realized, that people are not told clearly that if they don't pay in the second year or the third year, all of the money that they've invested will go in vain, because there's zero surrender in certain policies.
And which policies are these?
So these are typically traditional endowment policies which offer a fixed return. And fixed return, if you look at it on an IRR basis, it's abysmally low. It's like around 5 to 6%.
So IRR is internal rate of return. Apologies, I'm cutting you, because we have a rule on this show that we try to avoid abbreviation. So internal rate of return would essentially tell you over the course of the life of that investment, what is the amount of money that you're getting per installment, or putting all of those installments together, right?
Correct.
And where does that stand?